know why that would prevent it.
Can you hear?
How about now? Can you hear me now? So the audio shows on our side. Okay. Interference. Apparently we had a little interference from a different program. We've got that cleared up. So back to what I was saying. Hopefully everyone can hear me now. So feel free to ask any questions into the chat box that you have. So we're going to go ahead and get started here. Understanding your statements and online account access. Okay, so here's what we're going to be talking about. Some key terms. Sometimes some of the terminology you may see on statements may be confusing. So I'm going to try to clarify some of that and check and see if there's any questions that you have. We're going to look at a couple different types of account statements. And we're going to have to see, you know, if there's so many different statements that people have. I can't cover all of them because we use different types of investments and different statements in companies. But we're going to look at the most common ones. And then we'll move forward from that and look at how you can consolidate your Pershing statements and then get online account access either through Investigo or NetX 360. So again, if you have any questions as I go through, if something pops into your head about, well, I don't really understand this, please type it into the chat box. So first we're going to look at helpful tips to understand your brokerage statements. Your brokerage statements are going to show Madison Avenue Securities on the top, and our clearing firm is Pershing LLC. They're the custodian. Now, what a custodian is, they're the company that reports your IRA valuations every year to the IRS. They keep up with your cost basis. If you cost basis is how much you paid for an individual stock, and typically it's only applicable in a non-IRA account. So that's who our clearing firm is. So you'll see that on the top of the statement. Also, we want to encourage everyone to do e-delivery where you get your statements electronically. It saves you money. Pershing charges a fee to give you a paper statement. Now, sometimes people are fine with that because they'd rather have a paper statement, but you can always print off the statements if you ever wanted it. But they keep all of them you've ever had online where we can access them electronically. The way you do that is go to netxinvestor.com and you can sign up for paperless delivery, sign up for online account access. So you'll be able to see all your tax documents early, so you can see those before you get them in the mail. Sometimes people are in a hurry to get their tax statements so they can go ahead and file their taxes. And every once in a while, you'll be able to access those before you get them in the mail. You can see your trade confirmations, your statements, any notices that you have. But if you're signed up for NetX 360, which is where you can see all of your Pershing accounts, you have to log on at least once every 120 days or you get locked out. That's for security reasons. As you can imagine, security is very high. On all of these accounts, you can't move money in and out of them. You can only view them online. So the way, when you go to netxinvestor.com, and again, that website, you may want to jot it down, netxinvestor.com. You see it in orange there. When you go to that website, this is what you're going to see. You're going to see your financial organization over on the right-hand side. That's going to be HKA. You can also look it up, your user ID. But if you've never logged in before, you need to go down to the bottom right and click register. And again, this is where you can sign up for paperless statements for all your securities. Anything you have through Madison Avenue Securities or through Pershing, this is where you sign up for it. And I'd encourage you to do so, and then we can help you sign up for paperless statements. If that's something that you'd like to do and you haven't done it, if you type it, if you're not able to go on there and click register yourself, we can help you. Just type into the comment box and we'll keep a record of anyone that needs us to walk them through that. Again, if you don't sign up for paperless statements, Pershing charges $1.25 a statement. So it's costing, $13, $14 a year if you are getting paper statements. I like SelectLink That's a way where we can consolidate. Some clients have 4 or 5 different Pershing accounts, and we can make them into one consolidated statement and we use something called Select Link. We can email you a form to sign, and then they would all be consolidated. We typically encourage people to do that from the start. You want to make sure that you're reviewing your statements. We do them with our reviews. When we have reviews with clients, we make sure that we review the statements and everything like that. Something you want to keep an eye out for, and we do this also automatically when we have a new client come over, is if you have a non-IRA account, meaning it's not an IRA or a Roth IRA, if it's just a non-qualified account, that's the term for it, sometimes your cost basis may not show up. That's the price you paid for the stock. If you ever see a stock that shows missing cost basis, please notify us, because we can likely get in touch with your old advisor or custodian and get that information. You need that information because when the stock or bond or whatever security is sold, there's a tax implication. So we need to know the cost basis. So if you ever see on your statement something that says missing cost basis, or please provide cost basis, let us know. Now, typically, I don't see this very often anymore because custodians are required for the last 4 or 5 years to transfer those. But every once in a while, it'll show up. So if you see that, please bring it to our attention. Now, our clearing firm, Pershing, they provided something called a Guide to Understanding Your Statements. I'm about to share a file now with you, and you can download this. It's a PDF file. You should be able to see it. Just came into your window. I'm sharing it with you. It's a guide to understanding your brokerage statements. It's a step-by-step guide on how to understand your Pershing statements. So I'm going to keep that shared, and you'll be able to download that and go through it at your convenience, and it'll go into great detail about what everything means. And we're going to hit at a high level today some of those topics. So make sure to download that. If you're having an issue downloading it, let me know. All right, so the first thing we're going to look at here is a Pershing statement. When you get a statement in the mail from Pershing, this is what it's going to look like. You're going to see up at the top left corner, it says Madison Avenue Securities, LLC. They're our broker-dealer. When you're an advisor, a financial planner, and an advisor, you have to have a broker-dealer. And Madison Avenue is ours. Pershing is our clearing firm, and that's who holds the investments. They're like a bank, an investment bank that holds the portfolio. They're like a Fidelity or a TD Ameritrade. Up at the top left, that's what you're going to see. Down below that, you'll see your investment professional's name. And over to the right, you're going to see, the statement period, the period of time. It's blacked out because we had to hide the name, but it would show the month of the statement there right next to the name. So you'll see beginning account value. That's the value over on the right. That's in black. That's the value it was the month previous. Dividends, interest income, and then net change in portfolio value. That's how much up or down it went. And then the ending account value. So if you have any fees, they will show up right there as well. Any fees that were taken out over that period of time. Most statements are going to be for a 1-month period. If it's a mutual fund only account, if you only hold mutual funds in the account, then it's going to come once a quarter. So most accounts are going to have individual equities in it, so they'll come monthly. But under ending account value, you can then see your estimated annual income. That's how much income from dividends are expected. Now below that, you see asset summary. There's a green color there right next to the pie chart that says 1%. That's the amount of money that's in money market funds in this account. Typically, we keep 1 to 2% in money market for all kind of different reasons. If we need to make any purchases, to cover any expenses in the account. Below the cash and money market funds in this one, it says equities, 51%. Those are individual stocks. And over to the far right, you'll see the corresponding value of $330,084. So below that, you see exchange traded products. Those are ETFs. Just so you understand what those are, Those are funds that hold multiple stocks inside them. Sometimes they hold bonds, but we use ETFs to make sure that we're protecting. We use them strategically and typically change those more frequently. If the market's doing poorly, we'll be a lot more conservative with that portion of the portfolio. The equity portion, we do not buy and sell that frequently. It's just whenever there's a needed change because of a factor related to your stock. Like if the stock isn't projected to do as well or it's overvalued, we would change that out. So you can see that totals up to 100% beside the pie chart down at the bottom. So that's your asset summary. It breaks down what types of asset classes you are holding there. So again, if you have any questions, please type them into the chat box and I'll be able to see them there. Below that, you see short-term gain or loss. That means if there's been a gain that you've held for less than 1 year, that means that it's a short-term gain. So you can see on this one, year to date, across from short-term gain or loss, we've got a positive $855 realized gain. Unrealized means we haven't sold it. In this case, there's $41,000 of unrealized gains that have not been sold. So that means that we're still holding those positions. And so realized means it's been sold. Unrealized means it's still being held in the account. Now this is the continuation of portfolio holdings. It shows the value of the money market. It breaks it down more specifically. You can see the date there, activity ending 11/30 of 20. That's on the top line item there. You can see the opening balance, the closing balance. So a lot of this money was invested during that period of time. It shows what happened to the money market during that period of time. So 10/31 to 11/30 of 2020 in this one. Below that, we've got equities, and this is where 51% of this portfolio is held. On the left, if you see under equities where it says 51% of portfolio, this particular one says ABM Industries, and down below it, it's got a date, 4/8/20. That is the date that we purchased that stock. Now, anytime you see a date underneath the left-hand column where it says equities, that's the date that it was purchased. And then beside that, it says quantity. That's how many shares of the stocks we bought. Besides quantity, it says unit cost. ABM Industry, when we purchased it, cost $27.83. When you add those up, that's your cost basis, $3,423 in this particular one. Closing balance means how much it's worth now, $4,735. I'm just going straight across the right of the page. Accrued income, unrealized gain or loss is how much it's made. This one's made $1,311. And then over to the right, near the far right-hand side, we've got the estimated annual income on this stock of $91.02, and that's based off of a 1.292% yield. So that's what you're looking at. When you're looking at a statement that shows you your individual stocks, you're seeing all these different terms. And so I'm just explaining which each category means. You don't have to know all these details, but sometimes clients want to know what this means. So please keep that in mind. We've got a question here about establishing an account in NetX. It says it doesn't accept information. All right, we will get with you and make sure that we get you logged on. Again, if you have gone more than a certain period of time, few months, it won't accept your credentials and we have to start you over again. So that may be what happened, but we're making a note there to take care of that. Okay. So this is continuation of portfolio holdings. I'm going to skip down to the middle of the page where it says exchange traded products. In this portfolio, it's 48% of the portfolio. And these are ETFs that we use to manage risk inside the portfolio. So we would change these out based on what's going on in the market. ETFs we change more frequently. Most of the terminology is the same. You can see in this particular one, the purchase dates are on the far left, when they were purchased, the unit cost, And moving across the page, it's all the same terms, but the ETFs are going to look similar as individual stocks, but they hold more than one position. They're kind of like mutual funds without the fees, much less expensive. Now, at the end of your statement, you'll see something in the middle of the page here that says total portfolio holdings. It shows current cost basis. This portfolio started with $572,000, $572,700, and it's now worth $664,128. Unrealized gain of $41,427. That means how much money it's made. That's what people want to know. Are we making money? Are we losing money? Right? So you'll be able to see that under total portfolio holdings on your Pershing statement. Again, we're talking about Pershing statement. All right, so that's the basics of the Pershing statement. Some of the pages after this will show each individual dividend that has come in during that period of time. It'll break down any fees that have come through. So if you want more specifics, or if you get your statement and you don't understand something, always reach out to us and we can go into more details. But this is a high-level overview of what each category means and some of the terminology. Do I have any questions about Pershing statements? Just type it into the chat box there. If not, I'm going to move on to the next type of statement. Okie doke. Next is Allianz. We've got a lot of clients that have Allianz. Now, most Allianz are going to be considered fixed indexed annuities, but we do have some different types of products with them as well. What I'm showing you here is a fixed indexed annuity statement. What you're going to see on the front page is your name, the statement date. This one's from January 2017 through 2018. Below it, you'll see the name of the product. This one's the Allianz 360. And then the date that it started. This one started January 28th, 2014. Now, they kind of describe to you on the right-hand side there what's inside, the accumulation value. That's how much your annuity is worth. Now, these are principal protected, meaning that you can't lose principal if the market drops. Your worst-case scenario in a fixed index annuity is that you get a zero over that period of time if the market drops. So the second page is going to show you your beginning accumulation value. This one had $293,000. It made $77,000. And then this one has a fee on it because it's going to be used for lifetime income. Every once in a while, there'll be a fee associated with it, but most of the annuities that we have don't have fees in it. But sometimes clients want lifetime income, and these are great for lifetime income withdrawals. And it shows underneath there your accumulation value on January 27th was $367,835. And it shows how much is earned per year. This one's done 9.71%. And then below that, we've got how it's allocated. That means what are we invested in inside of this. So this one's in the monthly sum and the annual point to point. And you can see that it had a very good return period during that period of time. It made 26%. So that's what you'll see on your Allianz statements. That's what it looks like, and the breakdown. And these allocations, that they can be changed once per year on the Allianz generally. Now you also on this Allianz 360, you can have lifetime income, and you can see that it's got income issue age 64 in the middle of the page. Every year it's deferred from turning on income. You get a bigger piece of a bigger amount of income each year. So this person's had it 4 years. Under option 1, if they turned on income, they'd get 7.16% of their income, of their account value for life. So they would get 7.16% of $367,835 for the rest of their life. Option 2, on income, gives an inflation increase, but it starts out 1% lower, 6.16%. So that's what this information means if you have this particular product. Cash surrender value means how much do you get if you surrendered it early. So most of these have a time period associated with them. If you take all the money out prior to that, you get less. You get less money because you're breaking the contract. We never do that, of course, unless there's some kind of extreme case, but almost never had that happen. Below that, we've got death benefit. That's how much you get if you pass away during this period of time. You get the full account value from annuities if you pass away during before the end of your contract term. So $367,835. That's the same amount. $367,000 is what you get if you pass away early. All right, next let's look at life insurance. This is called an Index Universal Life Policy. There's different companies that have these, but they have a death benefit. They also have, you pay a premium in order to get this. I'm not going to spend a lot of time on this. I don't think many people on the call own these, but they work similarly except for their life insurance. You have it and you can overfund them and take out tax-free income if you want to, but this particular one, the top line shows accumulation value of $47,436. That's how much money is in there that's accumulated over time. So this person paid in $24,000 and their accumulation is $47,436. Now over that period of time, over the period of this year, their accumulation value went up to $75,166. So it gained over $30,000 during that period of time. So this one's called the Allianz Life Pro Plus. You would have this in place if you needed life insurance or if you wanted to overfund it and use it for tax-free income. So I'm not going to spend much more time on that. These are the different allocations you have in there. Next, we're going to look at Athene. This is another annuity that some people have. They use a different term. They use something called the balanced allocation value in addition to their accumulation value. So it's something that you want to be aware of. You can see here, looking at the top line, it shows accumulation value as of 1/30/2017, $175,000. This one shows accumulation value as of 1/30/2018, $172,375. And then the cash surrender value. This one has what's called an income rider on it, where there's a cost to that. That's why that dropped over that period of time, because there's a income rider fee on this one of 1.5%. So looking below that, market value adjustment. Some annuities have a market value adjustment. If you take money out early, they adjust it based on what's happening in the bond market. It's another factor. Sometimes it can be positive and you can have a positive market value adjustment. That's something that we deal with every once in a while. So below here, we've got Merrill Lynch RPM index allocation. They get 160% of whatever that index does. That's the allocation for this particular one. And balanced allocation value. That's what I was going to speak to. This one shows 198,176. 198,176. That's what really counts on these, is the balanced allocation value. That's how much it's up to at the moment. You can lock in that amount, or we could let it continue to grow. These you can lock in once every 2 years. So the balanced allocation value is much higher than the accumulation value, and it's the one that really matters for this particular product. You want to always look, if you have the Athene Balanced Choice, at the balanced allocation value. So I wanted to bring that to your attention. Nationwide. We have a lot of clients that have nationwide statements. Here you can see your beginning in the middle of the page here. Well, let's look above that. Contract summary. Initial purchase payment was made in 3/24/2016, $157,500. Below that, the balanced allocation value on 12/31/2016, $165,770. So on the nationwide, you can lock it in once every 3 years. So let's say you have a 30% gain after 1 year. You can lock that in, and it doesn't matter what happens for the next 2. It won't continue to grow, though, once it's locked in. But sometimes people are like, wow, that sounds good. Let's go ahead and lock in those gains. Typically, though, we just let them roll once every 3 years because historically that's what gives the best return. So below this one, you can see the beginning contract value, $157,500. Ending contract value, $157,500. But again, what the balanced allocation value is that can be locked in optionally. It's not considered your accumulation value until it's locked in, until those gains are locked into the contract. It's what it's worth as of that day, but you could lock them in early. In this particular case, that hasn't been done, so you're showing the contract value is the same as the purchase payment that was made a few months before. Below that, we've got the different allocation strategies. This one's the JP Morgan Mosaic Index, and it shows when that started, the strategy term, the start date, all of that's listed right below there. And the very important thing at the very bottom, it says lock-in status, not locked in. So that's why the accumulation value shows $157,500 instead of the balanced allocation value of $165,770. So that's the difference with the Nationwide and Athene, is their balanced allocation value can be locked in, and it becomes your accumulation value once it's locked in. I hope that makes sense. Okay. Again, is there any questions so far? Anybody else have any questions? So I want to take a minute here and describe the difference. We have 2 main places we encourage people to log in and see their accounts. If you want to see the most information about your investments, as far as your securities go, we like NetX 360. You really can do a deep dive into stocks and what's going on with your individual stocks. It gives you the most robust information. If you want a high-level overview and you want to see everything all in one place, including annuities, any real estate funds that you have, and your securities, then you need to use Investigo. That's going to be what we're going to be using going forward, is Investigo. And it shows you everything all in one place. But if you want more details than just showing you the valuation of your stocks and what you paid for them, you need to get NetX 360. I'm just describing the 2 differences. Most people are okay with seeing the high level of, all right, this is what it started with and this is what it's worth now. But other people want to see, well, let me look and see what's going on with this individual stock. In NetX 360, you can click on it and it'll give you a lot of information about the securities that you hold. So that's the difference. So anyone that would like to get a log on to either system, if you'll just comment, hey, please touch base with me. We would like to get log on information for NetX 360 or Investigo. Put it on the chat box here or give us a call and we will set that up. In addition to that, if someone has any questions and they haven't been covered and you want me to look at more detail at your statement with you and explain something, please reach out. We're always happy to make sure that you understand. We want to make sure you understand what's going on over time and why we do what we do. So that's my presentation for the day. It's just a high-level overview about terminology, about how to read your statements, and again, the 2 different systems we use: Investigo, which gives the large picture, shows you the big picture of all your investments. And then the other one's NetX 360, and it shows just your Pershing accounts. We also can get you logons to individual annuity companies. So maybe you want to look at Nationwide or a Security Benefit or Allianz or American Equity. You can get a logon direct to almost all of those as well. So we can help you set any of that up you'd like. And I don't see any questions coming in. If you don't have any, I guess we're going to go ahead and sign off. But again, okay, so we've got a question. Well, someone says they want to be able to log on. So we will get you log on information for that. And well, when we end here, I'm going to leave the chat box open for just a few more minutes. So thanks again and have a great day. Take care, everyone.